Have you been considering buying a property for yourself, but don't even know where to start? Make sure you watch these 5 crucial tips so that you don't make a costly mistake and waste both your own money and your time. My name's Ryan Guenther, and I'm a local realtor here with Realty Executives Saskatoon. If you find any of the information in my video helpful and want to connect with me farther, all my information will be in the description box below, or you can drop me a comment and I'll connect with you there. For most people, purchasing a home is the single most expensive purchase they'll ever make in their lifetime. So it can be very stressful, but in all honesty, it doesn't really have to be. With proper preparation and expectation setting, it can actually be quite a bit of fun. In this video, I'm going to give you the 5 most important things that you need to know in chronological order when looking for your new home. So first up is the down payment and associated closing costs when purchasing a property. Obviously, everyone knows you need to save some amount for a down payment. So the down payment requirements up to a purchase price of $500,000 is 5%. So that'd be $25,000 on $500,000. Any amount after $500,000 and up until $1 million, the down payment requirements is 10% on whatever amount is over $500,000. So for an example, if you bought a $600,000 house, it would be $25,000 up to $500,000, and then $10,000, which would be 10% of the remaining $100,000 to get you up to that purchase price of $600,000. So your total down payment for a $600,000 purchase would be $35,000. If your down payment is less than 20% of the purchase price, you'll have to pull what's called an insured mortgage. So basically, there's a company, most commonly it's Canadian Mortgage and Housing Corporation, or CMHC for short, that will insure your mortgage so the lender, in the event that you default and don't make your payments, can go to the insurer for compensation. So with a 5% minimum down payment, you'll pay 4% insurance to CMHC. You'll never see this amount you're paying of insurance because it gets rolled into your mortgage. But ultimately, if you have 5% down, only 1% is actually going to the principal of your property, and then you're mortgaging the rest. If you have 10% down, that CMHC insurance drops to 3.1%, which is 0.9 or almost a full percentage of savings for you by having that extra 5% down payment. The amount you save on the CMHC fee does scale down the more you have for a down payment, but the biggest gain is between that 5 to 10% by saving almost a full percentage on the insurance. For instance, if you had 15% down, it's 2.8% insurance to CMHC, which is only 0.3 more. And as for closing costs, all lenders will require you to have 1.5% of the purchase price set aside for your closing costs. So in reality, when purchasing a home, you need a minimum 5% down payment and 1.5% for the closing costs, so you need a minimum 6.5% actually setting aside in your savings account when you're going to purchase a property. And if you note, like I said before, by having 10% down versus 5%, you're saving almost a full percentage. Well, that almost full percentage could pay a good chunk of your closing costs, for instance. So you got your down payment, you got your closing costs, and now you're going to try to go get, a loan for a property or get pre-approved. Next up would be your credit score. So like I said earlier, if you have 20% down or less than 20% down, you need to be insured from CMHC, which means you have to qualify under their lending guidelines. So absolutely minimum credit score for any form of financing is 600, but they usually like to see 680 to 700 or better for a mortgage. It just gets tighter, and the debt ratios that they allow, if you're under 680, come into effect, and you just essentially have a little bit less borrowing room. But at the same time, it's not just the number, it's also the history behind that number and what your overall credit picture looks like from the lender standpoint of view. So you got the down payment, credit seems to be in order, and now you want to get pre-approved. Well, a pre-approval and a pre-qualification are two different things. I know the terms kind of get used interchangeably, but a pre-qualification would essentially be you going to your lender and giving them a good insight into your financial picture. As long as you don't lie to them, the numbers they give you are going to be based off of debt servicing that they're going to do for your pre-approval anyways. However, to actually go get pre-approved, you're then submitting T4s, authorizing credit pulls with Equifax or TransUnion, and they're doing a deep dive into your mortgage application. A proper pre-approval will do 80+% of the work required for when you actually have a live conditionally accepted offer on a property. So if you go through the pre-approval process with a bank that actually does everything they're supposed to do, you can shop with a high degree of confidence moving forward that when you find a property, you fall in love, and you get a conditionally accepted offer, that the financing should pull through to the end, outside of some extenuating circumstances. Another good thing about getting pre-approved is the fact that you normally get a 90 to 120 day rate hold. So what that means is in the event that the next 3 to 4 months of you shopping, interest rates happen to go up since the time you were pre-approved at, you will get the lower rate when you're actually accepted on the deal. The only caveat to that is you need to have taken possession and be living in the house within that 90 to 120 day rate hold. And with most lenders, if rates happen to go down during that time, you're getting the lower rate than the one you would have been pre-approved at previously. But at the end of the day, you have to be comfortable with what you're spending. And I always say, sometimes it's not always maxing out your pre-approved amount that's the best idea. Because lenders only look at a few things when it comes to you qualifying for a mortgage in relation to life expenses and the overall costs of owning the home. So before you start seriously get looking, I would break down and make a budget for yourself of what groceries cost, what all your bills cost, and see how much money you need to live outside of that mortgage payment and then the taxes and the heat, which is all that a lender basically looks at when they're putting your pre-approval through. The fourth point would be picking a realtor. You've got your credit in order, down payments there, pre-approvals locked in for the next 3 to 4 months, and you're ready to get shopping. But you need someone to help you through the home buying process. You know you're going to want an experienced agent that can show you neighborhood profiles, schools in the area, walking trails, recently sold data from some of the houses you might be interested in, along with other active listings, maybe in some neighboring neighborhoods. And while you want an agent who you can be confident in their skills in the industry itself, another thing that I feel is almost equally as important is for you to truly enjoy who you're working with. You're spending $250,000, $500,000, or $750,000, and it's a very stressful time. So you should at least enjoy who you're out shopping with at 8 p.m. on a Thursday evening. So when you find a few realtors that you might potentially want to work with, I'd suggest performing an online audit for yourself on them. And if they pass that, at least sitting down with them for an hour and see what they're all about. And for point number 5, I would say being realistic with your expectations and understanding the process of buying a home from start to finish will take a lot of the nerves and a lot of the unknowns out of all of it. So this kind of segues from the picking the right agent, but you should have a good understanding of the market, the price ranges you're hoping to buy in, and the neighborhoods, so you can accurately set your expectations of really what you're getting into. In talking specifically about the Saskatoon market presently, that would mean that if you find a good property that you are truly interested in, unfortunately, you don't have the luxury of waiting presently. If it takes losing out on a few properties, it is what it is, and sometimes that's the best thing you can possibly do. But again, going back to expectation setting, just becoming comfortable with what it takes to buy a property in whatever market you're shopping in. But because things are very competitive, try your best not to get too emotionally invested in a home early on. There's always going to be another one out there. And again, if you have the right realtor, he'll explain all this to you so that you don't have to get worked up for no reason. And when the time finally does come that you find the one. It checks all the boxes, or almost all the boxes, and you gotta have it. Understanding your bottom line makes a world of difference when it comes to a multiple offer situation or any form of negotiation. And what I mean by that is, for example, $1,000 of mortgaged funds is about $6 a month. So if you're in a multiple offer situation, it's the evening, and you're going to hate yourself if you don't get that property come morning time, $5,000 is about $30 a month. $10,000 is about $60 a month. So understanding the whole picture when it comes down to it sometimes can make the difference between saying, I'm not paying a couple more $1,000 and I'm done with it, than just understanding that it's going out for lunch 1 or 2 times in the whole course of the month. So I hope these 5 tips were helpful, specifically for the Saskatoon market in 2024, because I feel like it will be a little bit of a challenging one, but there is going to be plenty of buyers out there all year long. So the more you're prepared from start to finish and you have your affairs in order, the higher chance you have at succeeding at some point and securing an awesome home for yourself. Again, my name's Ryan Guenther. I'm a local realtor here in Saskatoon, Saskatchewan. If you found any of this information helpful and want to maybe book a call with me, all my information is in the description box below. If not, you can drop me a comment and I'd love to connect with you there. Chat soon.